believe it. You know, there's a lot of people. There's a lot of people who are like maxis, and I mean, I don't subscribe to any of those stories, like those Bitcoin maxis or ETH maxis. You know, that's not how institutions think. Obviously, from the data we're looking at, institutions are participating in both. So don't be a maxi. Maxi. If somebody says they're a maxi of something, yeah, I know, but yeah, yeah, of course. Yeah, and anybody who says they're a maxi, I mean, to me, it just sounds like, well, that just means you're closed-minded. Because if you look at where the money flows are going into both. And right now, it looks like ETH money. There's a lot of ETH money. Look at that notional value, 5.56 million, and Ethereum is like trading literally only like $100 million away, and it was way more. It was used to be hugely different. It was like 20-30% different. Now it's like fractions, dude. Like one day's amount away. Okay, and to me the amazing thing is like the amount of hedging that's going on, and the amount of call buying that's happening, because the call buying is not just happening in Ethereum and in crypto, it's also happening in SPX. And what are the chances, again, like just from what I said before, what are the chances that this is just a coincidence? All right, that 4,500 strike, damn, I gotta go back to that. I can't. I gotta keep on this topic because this is just too exciting for me, man. This is the math nerds like fucking wet dream, bro. Fuck, this is amazing. No, I'm being patient. My Bitcoin buying level is at that red line on a Bitcoin gold chart. I'm not participating unless it hits that line. And when it hits that line, I might even buy some ETH. I might even buy some ETH now. But yeah, I mean, like for example, on the December chain, real exciting stuff, guys. Hold on. In the middle of the day, the SPX option chain on TOS is really laggy, especially when I have Discord like screen share going on. 4,500 was the big OI, or for the big volume day today on SPX. And look at that. The big volume day is Delta 18. It's Delta 18, right? Delta 18. What is the likelihood that all the call buying in Ethereum and Bitcoin is at those levels? What is the likelihood? 3,000 calls. The 3,000 calls. No, it's 3,000, 2,500, and 3,500, right? 3,000, 25, 25, 3, 35, 25, 3, 35. So it's the same thing. 25, 3, 35. We're seeing that. Look at that. Look at that. 4,000. All that call buying happening. All that call buying. Where does the volume start? It starts at Delta 19. Boom. It just matches SPX. Okay. That's for Bitcoin. Okay. That's for Bitcoin. Bitcoin. There. All the volumes that start at Delta 19. Let's look at Ethereum. Ethereum December. Same thing. I mean, look at this, 3,500. I mean, this is a little bit more. It starts out a little bit more. So this one a little bit less, but still, I mean, one of their biggest OI and volume strikes is that 18, Delta 18. I mean, what's the coincidence of that? That can't be a coincidence. It's got to be institutional. They're thinking risk on for the rest of the year. That's what institutions are saying. So the big boys, I'm not talking about you and me. I'm talking about big boys. I'm talking about sovereign wealth nation funds, insurance companies, big banks, big money managers, not hedge funds. Hedge funds are stupid money. It's like retail with billions, okay? That's what hedge funds are, okay? But the big sovereign wealth nation funds, the pension companies, the insurance companies, the banks, the big money managers, they're all thinking the same thing right now. Risk on till the end of the year. Now, whether they're right or not, I mean, that's another story. Sometimes the institutions are wrong, but they're definitely positioning themselves for a risk on sentiment for the end of the year, and not just a small risk on sentiment. They're actually thinking this is going to be a big bull pop because they're Delta 20s. They're delta at 15, 20. That's far away. So in order for them to profit off of that, they need big moves. So right now, the big institutions are betting on some big moves in the market. At least that's from what I see. That's what I see right now. That's why I'm so excited. It's just all matching up. All the deltas are matching up. The hedging, the volume activity, the September and December OIs being the greatest OIs. You know, this one now is December for Ethereum for volume. But then look at the OIs. Monster September, December. Just like in SPX, September and December are monster options expirations on S&P 500 as well. Also, look at this. It's starting to form again, September, December, except, Bitcoin is a lot more retail participation too. That's why you're seeing the 29th of July. There's a lot of retail here. But the institutions are here, just like in S&P 500 in cash index options. Crazy. Yeah, I went over that in the beginning. I said that was the first thing I went over is the ECB meeting and the 50 basis points hike, how it was a little bit higher than the consensus expectation of 25 basis points. Lagarde is starting to sound hawkish now. She also put out some warnings that inflation may be a sticky problem. She's the only one that actually said that. Everybody else is saying that, inflation, we'll be able to get out of it. And already the Fed is actually tempering their inflation expectation, but Lagarde is actually ramping up inflation expectations. And I think it's because of the challenging problem that she has managing the situation, because the Eurozone, it's a mix of different countries that have very different economies and finances. Germany's finances is totally different than Italy's. Italy is has a lot more debt and is not as productive as Germany is. So she's in this it's almost like a tightrope walk that she has to do. It's a very complicated problem, actually, and she has her work cut off for her. I would hate to be Lagarde right now. She's got a very complicated problem, and already in Italy, they're already seeing the starts of crisis. They're already, in their it's already showing up in their politics. And I told you guys this, that, when it comes to international credit crises, this is how it starts. It starts with one or two countries and it starts spreading. Remember how we talked about Sri Lanka and Pakistan just a few weeks ago? Now we're seeing it in Italy. We're going to see it in Spain. We're going to start seeing it in Greece. We're going to start seeing it in Latin America, Southeast Asia, China, I think, with their real estate bubble, everything. We're going to start seeing this a spread. Now, that doesn't mean it happens all at once. Okay, so our EEM puts, by no means are they safe. This might be something that manifests itself maybe closer to the end of the year 2023. We may be a little too early. I don't know. I don't know that, okay? But right now we're positioned for that. And if I see that we're a little bit too early, again, we're going to get that signal from the dollar, I think. And if the dollar closes under that 18-day moving average, I think that's a signal that, yes, maybe this EEM problem, it's going to manifest itself, but it's going to take a little bit longer. We should exit all our risk-off positions, reassess, and get back in when it's a better time, okay? So that's the whole idea behind that. Yeah, I put that on our Discord that I got into FEZ. Yes. Yeah, I put it on there, right? Did I forget? Oh, you're a little bit behind. Yeah, I mean, you have kids and they're probably on summer vacation, right? It's probably summer vacation. So, isn't it school summer vacation? Yeah. Unless they changed the school schedule since I was a kid, you know. Oh yeah, of course. Yeah, if you're a parent right now, you're probably very, very busy. So I understand. Yeah, but it's on there. Actually, you even commented on it, man. You even commented on my play. Uh, yeah, I saw that. Yeah, you even made fun of my play. You said 2 to 3 day rule for any NB call out. Bastard. Fucking bastard. But it's kind of true. It's kind of true. Hey, it's kind of true. It's because, and it's just because, I started in this business in the institution side. And in institutions, they build positions out over long periods of time. And like, that's kind of like my training. And I guess kept to that. I should start, timing things a little bit better, but it's so hard to time, especially in this market. So what I do, and I know myself too, if I don't get into something even a little bit, like even like one spread is nothing to me, but at least it alleviates my FOMO. I have deep FOMO issues, bro. Like that's why my timing is shit. But that's why I always use like option spreads, options, premium selling strategies, and I rely a lot on my data because of that, because I know my timing is off. Everybody has their strengths and weaknesses. My strength is data. My strength is knowing options. I know options down cold. And those are my strengths. But my weakness is definitely timing. I'm not the best timer. That's the area where I have the potential for most growth, is learning how to time things. But that it is what it is. Everybody has different things. I mean, for me, that FOMO is like, that's why I always have to remind myself, joy of missing out, joy of missing out, joy of missing out. Every time I see a trade, I always have to say that 3 times before I get in. So, I have my own little quirks and things. Everybody has theirs, everybody has their little quirk or whatever that they do for trading. It's really understanding yourself is a big tool. I think in any endeavor, not just in trading, but in anything. Knowing yourself, knowing the situation, knowing the game, all very important. As Sun Tzu said, from The Art of War, those who know the enemy and themselves need not fear the result of 100 battles. Those who, know the enemy but not themselves, for every win, they will have a loss. And those who don't know either are destined to lose forever. That's I'm paraphrasing, but that's like a quote from Sun Tzu, The Art of War, which I recommend you guys read. It's a very wonderful book on strategy. I read it once a year. It's one of my books that I read once a year. Any other questions? Questions, comments, rude remarks, things you guys want to go over, anything like that? Man, I'm excited about crypto. Man, I haven't been this excited about a market in a while. But I'm not participating. That doesn't mean I'm participating. It means I'm observing, okay? I'm observing, all right? So, keep... You hoping to put on Tesla? Brosif, why? I mean, okay. If it's small, okay. Yeah, I mean, that's fine. But really, for Tesla, what I'm waiting for is here. Red line. That red line, you can copy this red line if you want. Just connect these tops. 1, 2. Well, this one didn't exactly hit. But this was the last time I shorted Tesla right here. I shorted Tesla right here with some puts. I bought some ARK puts. Remember those guys? Remember in April? We hadn't had checkmate trading. So those of you guys that were in the previous Discord, you guys know that I shorted ARK right here. And I made like 300% or so. ARK doesn't have that much anymore. That's why I'm not going to use ARK anymore. At that time they did. I think Kathy Woods got out of all Tesla shares. So I will not be using the same instrument. I just used ARK at that time because I think here there was a huge volatility spike. And I wanted something closer dated. And so not to pay that IV, I chose to use ARK instead. And I remember I made like 200% profit on that. So that's the last time I quote unquote, shorted Tesla. But this time I guess I will have to use Tesla options. I'll probably use a put spread right here once it gets to that red line. It's been a wonderful red line. I drew this back in January, and it just went back to it magically. And so I think it'll go back there, and I'll short it again. I'll short it again right here. It's the gift that keeps on giving, man. I don't know what's going on with this. This line right here is a gift that keeps on giving. Wonderful, wonderful line right here. I think the pros have this line up. That's probably why the pros are using this line. I mean, again, I drew it in January and it hit right here. I remember you guys remember? I posted the picture on the old Discord probably around here when it jumped. I said, I remember it was like around end of March when I posted this picture. And I said, oh, I drew this line in January. If it hits there or gets close to it, I'm going to short using ARK. And I did. Actually, I think it's on my personal Twitter, Mickey Blindside, Twitter at Mickey Blindside. You can just go and see when the timing was on that. I think I posted my trade on there too. So you guys can take a look at that. So yeah, let's just go through our indicators one more time since you guys are here. I see more people, different people here now. Nunya, you're here. Mitch, it's good to see you as always. ZF, still underperforming ZB. LD showed me this. LD mentioned on this, which is who's one of our other members. He trades mostly futures. That guy is all about futures. And he pointed this out to me, which is very interesting. It makes the carry trade a little bit more desirable in the dollar. But the main indicator, dollar index. Nunya, you're on here, bro. Make sure you use the right dollar index, bro. You're using the New York Board of Trade dollar. Okay, use the Intercontinental Exchange one. That's the one that's tracked more. But yeah, I'm looking at this. As long as it holds that, this is where the 20-day, 18-day moving average is. I just don't like having all those weird lines on my chart. If you want to see those weird lines, fine. Here, I'd like to see a clean chart. I don't like to see lines, you know, because that's the last thing I use. I use Bollinger Bands for risk management. It's pretty much it, and the 18-day moving average too. I'll use that, just because the pros use it. I know the pros use it. That's why I use it. But yeah, right there. That's where it is. That's where I always, this blue line, this blue dotted line will always shift on the chart based on where the 18-day moving average is. Okay. It's actually funny. This is a line that I drew back in May or June. And it's funny how that is where the 2-day Bollinger Band, 2 standard deviation Bollinger Band is now. It's almost like that is the take profit point for dollar shorts. Interesting. Not really sure what to make of that yet. Of course, when I gain insights, I will share with you all. Same thing, the mirror image right here, 18-day moving average. It's almost like behaving exactly the same. We usually don't see it like this. Usually there is it's a little bit different, like all the lines are a little bit different, but the lines are matching up. Coincidence? Maybe, maybe not. Okay, so that's that. And, our AD line too. Let me show you guys the AD line. AD line up. So we're now above this point. I don't know if you guys can see my cursor. Can you guys see my cursor right here? So yeah, that is, now it's higher. So it made a higher high. On the next pullback, if we make a higher low and it turns back up, I think then probably the bottom is in. Okay, so keep an eye on this. I post this nightly. Whenever the Finro website updates, that's when I do it. It's only updated once a day at the very end, at nighttime. So this is not something that I can just update live. Ooh, one thing, you know what I didn't go over on the high noon highlights? Damn, I wanted to go over this. This is the corporate credit spread. Okay, the corporate credit spread right now. I noticed that the corporate credit spread made a higher high, higher low. Ooh, not good. That's not good for risk assets. Generally, what you want to see, if this is in an uptrend, so let me show you guys. If this is in an uptrend, if this spread is in an uptrend, it usually means bad times ahead. Why? Because it takes your junk bond yield and subtracts the 10-year treasury from it, and that's the spread that it tracks. So the higher it is, it means that there's more risk being priced in corporate bonds over the 10-year treasury. If it's low, it means relative to the 10-year treasury, there's not as much risk in corporate bonds. So generally in bull markets, you see this line trending down and going to the lows. In bear markets, or when there's a recession or when there's a big risk on corporate balance sheets and corporate earnings, we see this spike. We see it going into an uptrend. So we're actually seeing an uptrend in corporate credit spreads. I don't know what to make of that yet. But that's just something I've noticed. Still, dollar is main. Dollar and euro is the main right now. Dollar and euro, okay? Dollar and euro is the main, all right? All eyes on the dollar. Everybody I talk to, every trader I talk to, whether they trade oil, whether they trade metals, stocks, options, currencies, you name it. If you're a serious trader, you're looking at the dollar. You're looking at the dollar. Okay, if you're a serious trader in any asset class, you're looking at the dollar. It is what it is. Okay, if you're not looking at the dollar, well, then you need to join Checkmate Trading and see why. All right, it is what it is, man. The dollar, that's where it's at. Anyway, anything else you guys want to see? Anything? Going once, going twice. Okay. All right, guys. I do have an appointment that's coming up, but I will be back. I will be back at the end of the day, and we'll go over data one more time at the end of the day. 30 minutes before the markets close, I'll be back. I'll send an announcement on Discord whenever I get back on, guys. Okay? Peace out.